I really feel like I can't even stop talking about it. What's going on in the market? Raging inflation, the insanity of the housing market over the past 2 years. I have people asking me about it daily, so I want to bring you, my YouTube audience, into the conversation with me for another market update. Yes, the real estate market is shifting. The Fed raised rates 75 basis points last week, which is the largest rate increase since 1994. It's being reported that they plan to dish out another 0.5 to 3/4 point rate hike in July, followed by at least another 0.5 point rise in September. These large rate hikes will continue until inflation shows signs of being reined in. All of this is in an attempt to slow down inflation, which is now at a 4-decade high. The impact of these rate hikes by the Fed is that borrowing costs increase and money becomes more expensive to borrow. Banks pay more money to borrow money, and that cost is then passed along to consumers with higher interest rates on lending products like mortgages. When debt becomes costlier, it encourages savings and it cools off buyer demand for goods and services, which in turn cools down inflation. As all of this relates to real estate, higher interest rates translate into higher mortgage loan costs, which makes homes more expensive for buyers, thereby reducing demand for home purchases. Historical evidence shows that higher interest rates tend to slow down home price appreciation. Home prices are not only driven by interest rates, it's way more complicated, which makes it hard to say how exactly the housing market is going to react to these moves by the Fed. I mean, who would have guessed that the pandemic would set off this raging inferno of the housing market that we've seen in the last 2 years? Most analysts thought that the pandemic was going to totally decimate the U.S. housing market. Didn't happen. Rising interest rates impact both buyers and sellers. For buyers, many find that purchasing power decreases. To keep their monthly payments in a zone that works with their debt-to-income ratio, the price of the house that they can afford, well, it has to go down. Real life talk here. The impact of these higher rates translates into about a 25% drop in house hunters' purchasing power since the beginning of this year. For example, a buyer who could afford a $360,000 home with a $1,400 monthly mortgage payment, that's with no taxes and insurance. Now, with the nearly 6% mortgage interest rates, a $1,400 monthly payment would translate into a $270,000 home. For sellers, rising interest rates means that the buyers out there are getting spooked, or some of them are being priced out of the market, which shows up as less interest and demand for your home. So is this where we all start screaming existentially into the universe about the market crashing? No. Don't expect the market to crash in many areas. We've seen more than a decade of new construction not meeting current demand. Millions upon millions of people who are part of the generation of millennials are aging into their prime home buying stage of life, which has created just an enormous imbalance in the U.S. housing supply and demand. When you have that much pent-up demand for housing, the likelihood of the wheels just falling off the bus? It's unlikely. The National Association of Realtors just published an article digesting the recently released national May housing numbers. Here are the highlights. Home sales are falling from their pandemic-fueled highs as homebuyers tighten up their budgets. Home sales have essentially returned to the levels seen in 2019 prior to the pandemic after 2 years of gangbuster performance, says Lawrence Yun, chief economist for the National Association of Realtors. Movement in both single-family and condo sales are nearly equal, Young adds, possibly implying that the preference towards suburban living over city life that had been present over the past 2 years is fading, with a return to pre-pandemic conditions. Further sales declines should be expected in the upcoming months, giving housing affordability challenges from the sharp rise in mortgage rates this year. Nonetheless, homes priced appropriately are selling quickly, and inventory levels still need to rise substantially, almost double, to cool home price appreciation and provide more options for home buyers. Despite the decreases last month in home sales, prices remain strong. The median existing home price exceeded $400,000 for the first time on record, reaching $407,600, up 14.8% from a median of $355,000 a year ago. Here is a closer look at how existing home sales fared across the country in May. In the Northeast, home sales rose 1.5%, reaching an annual rate of $680,000. However, sales were down 9.2% from a year ago. The median price in the Northeast was $409,700, a 6.7% uptake from a year ago. In the Midwest, they fell 5.3% and reached an annual rate of $1.24 million. Sales were down 7.5% compared to a year earlier. The median price in the Midwest, $294,500, up 9.5% from a year ago. In the South, they dropped 2.8% in May and reached an annual rate of $2.41 million, down 8.4% from a year ago. Median price in the South, $375,000, with a 20.6% increase compared to a year ago. In the West, home sales fell 5.3% and reached an annual rate of $1.08 million, marking a 10% decline from a year earlier. Median price in the West, $633,800, an increase of 13.3% from a year ago. If we dial in and we look at May numbers here in the greater Iowa City area, it looks like the average single-family home, now keep in mind this is just single-family or zero lot, not condos, was $320,000, which is down 4.5% from the month before, where it hit a peak of $335,000 in April. May closed sales show an increase, which is not surprising for this time of year, and look to be right on par with the number of closed sales for May of last year in 2021. Days on market is 29. Now, our days on market never match up with national days on market because of differences in the way those numbers are reported. Most markets count days on market as how long it takes for the house to go under contract. But here in the Iowa City area, our days on market is how many days it takes to reach pending status, which means that all buyer contingencies have been released, including the buyer's financing contingency if they are a financed buyer. It normally takes about 30 days for most lenders to be able to release their financing. So a DOM, or a days on market of 29, tells me that houses are going under contract very quickly. In May, homes were selling for about 102% of list price, which is a big indicator that many sales were probably multiple offer situations. Our new inventory and active listings are about the same or slightly less than May of last year, which just goes to show you that what I was talking about earlier in this video is very much in play here in our market. There is a shortage of housing inventory. Our rate of absorption, which is the metric that tells you if you're in a seller's market, buyer's market, or a neutral market, is 2.2 months of inventory. That is seller's market land, and I'm going to be very interested to watch these numbers over the next couple of months to see if this eases into a more neutral market territory as we get to watch the impact of those rising interest rates shake out in our monthly market reports. Okay, so what does all of this mean in light of the news and the talking pundits screaming at you about a market crash? Breathe. Nothing is crashing here in the greater Iowa City market, and honestly, nothing is crashing in a lot of other markets. We're seeing a shift, a correction, if you will, from the pandemic-fueled housing market insanity. We were like in an altered state of reality. And what does shift mean? Well, for one, you can expect home price growth or appreciation to slow down, and that's okay. I think we can all agree that the rate at which home prices were growing was unsustainable and just plain bad for many Americans. home sellers are going to need to recalibrate their expectations, and that means pricing your home realistically and appropriately. It means not assuming that you're going to get multiple offers with buyers just throwing everything under the sun at you in order for you to pick their offer. And you may no longer be expecting your house to sell the very first weekend it's on the market. Things that happened a month or two ago to your friend or your neighbor when they were selling their house, well, it may be totally different for you and what you'll experience today and in the coming months. What does this mean for home buyers? Well, hopefully it means they can breathe a bit easier, knowing that they will be less likely to be in competing offer situations. And hopefully the days of having to just waive inspections and appraisal contingencies and everything else that might possibly protect you as a buyer, hopefully those days are coming to an end. Yes, your mortgage rate is going to be higher, but try to look at it with some perspective. Historically speaking, current rates are still low. I heard an interesting quote the other day that said, "Marry the house, date the rate." Meaning that if you love the house, you should still buy a house. You know it's a long-term commitment, but you're not married to your interest rate. You can refinance down the road. And if rates climb even higher and they don't drop back down, well, then you'll be happy you locked in when you did. Hey, thanks for watching. If you have any questions about buying or selling real estate here in the greater Iowa City area, let's talk. You can find all my contact information down below in the description box of this video. Hey, it's been fun, and I'll catch you later.